Hey, hello, welcome to another Yes Futures trading streaming video. Today is Monday, August 21st. It is 8:50 Eastern Time in the US. We have, let's see what we have in front of us right now. The market on Friday ended with we had a spike to the upside. It's not ended with a spike, but we have a spike to the outside, and the market closed back inside range. The peculiar thing, it seems like this day is going to be very interesting here. We have this high, and that was solved mechanically from the high of the lower distribution. We understand that the market is very short. We have a very questionable high here. Very questionable high here as well. You have 1, 2, 3, 4 highs. 5 highs down here. And a questionable high on Friday to close the week. And I think the most important thing is that the trade has been completed. We have this range in the weekly. The market has traveled to the opposite side of that range. So this part of the trade has been completed. What's going to happen next? I don't know. I don't think anybody can know what's going to happen. What we may have here is some sideways trading, some rebalancing of this short inventory here. And since the inventory is too short, we may have even some kind of rally, which potential destination could be this high, to repair these highs here. The 50 is up here. 1, 2, 3, this high here. Okay. Some rebalancing on some form of range forming here, because this market has been trending to the downside for such a quite a big 1, 2, 3, 4, 5 days already, and travel a considerable distance. And the remarkable thing here was that the VIX didn't move. From this high all the way down to here, I think was here, the VIX was 14, 15. Now is, how much is the VIX now? Let me check that. Now is 17, almost 18 down here. So expect some volatility. When the higher the VIX, the wider the ranges can be. And what is happening now into the opening, we have a spike. We have this spike here. Even market opens above the spike, that's a positive sign. We also have the possibility that the market opening with a gap to the upside. So we would have 3 things, that we can, even 4 things that to observe in the daily or in the intraday. First thing is the overnight inventory being long. The second thing, the late spike from Friday. The third thing, the gap. So multiple things to follow here. And on top of that, the market is right around this 400. 400. This century numbers have this magic effect on traders, on the mind of traders. This is, you sell from the for these round numbers. You buy from the 40, but this 4400 actually has nothing on it. You can see the 4500 was relevant, and the 43 Where's the 44? There's nothing here, the 44. The 43 could be relevant as well, but so far there's nothing. And remember, the low is very questionable of this day, of yesterday or Friday, very questionable, the opposite side of the range. And I will be paying special attention where the market opens here. Okay, if the market takes this high out, there will be change in the market. And trading is about change. I'm opening up here signals the end of the downside trend, at least in the short term. You know, there's no more downtrend. This is the end. But something usual, something that happens quite often, is after these big, downside trends or upside, it could be to the upside as well, the market tends to form range. We may have maybe some inside day today, or take this high out, but expecting some kind of rotation. That's one scenario. Okay, was a scenario. Another scenario here could be the market, it is hard to visualize this, but being the market too short, it is hard to think the market can come back all the way up to here, for example, in just one day. It seems so far now, for example. I'm not saying that's going to happen, but it is just so far. I mean, it's so hard to visualize the market can come all the way up to here in one trading session. But things like that can happen, especially when we have this super short inventory here. But something that we talked yesterday as well, that can favor that scenario, is that there was kind of like a significant volume at the opening. The first two periods from Friday was very high volume, which could signal that there was more than short cover, more than overnight short, more than a counteraction to overnight inventory there. Now, for me in particular, what I am watching here is this spike here, what the market does with this spike, where the market opens. Opening inside the spike, this is neutral. Those kind of openings have always been for me the hardest ones, because it's neutral. Opening above the spike, above Friday's spike, is positive. Opening below the spike is negative. But because it means, right? It means that higher prices are being rejected or higher prices are being accepted. Opening inside the spike is neutral. Whatever the scenario it is, what I'm watching also is what the market does with these distributions that we have in the overnight and the distributions that we have on Thursday. Okay. Anything here, if the market, this scenario, market rallying or market going from long liquidation mode to short covering in one day, which is not usually what happens, because markets tend to go from trend to range to trend. Those V markets are not usual. They can happen, right? But most of the time it doesn't happen. What I'm going to monitor is what the market does with this distribution. If the market can close this distribution here, closing this distribution, if market opens up here or up here, closing this distribution is a continuation. It shows upside continuation, and the potential next thing or the potential destination trade could be this high or this high up here, if the market can close these distributions as well. Right? These two distributions are for me are key in the upper side, and in the lower side, as I say, this low is very questionable. And notice also how there was a lot of buying, a lot of trade around Thursday's low. POC is right there. You see it's in down here. And this pullback low is also very, very questionable. This is Friday's pullback low here. If the market keeps this, but I mean, I don't think this is going to keep, right? This is super risky here to say anything about this, but I don't like these lows here. Having a huge pullback here. If you remember what happened here, this was a liquidation of all these longs. It happened so fast. The next thing also happened so fast, and prices were rejected here. The market came back down to here and just boom, it was bought. It was bought fast. Market reached this level and was rejected. Global prices were rejected there. This is at support now. The market trades below this level. It may not happen today, but if it trades below this level, it risks, a serious, I think, it can risk a serious downside continuation, below the four-week range low here. What I'm seeing here now is a liquidation. It's liquidation on all these longs. Yesterday's opening, the opening of the week was a very soft, very, very slow opening. There wasn't much then. Very mechanical, being bought from saddle, sold from the high, sold from the base of the spike. The base was taking, then this low was taking, and then short covering here, and now the market is liquidating this low. All this long inventory is being liquidated. The remarkable piece of information is we have two distributions here. Multiple things to monitor today. There are multiple things to monitor that we need to follow really close today. Things can change. Things can change really fast. I'm not in a hurry to trade. The market has closed the gap. Market closing the gap is a sign that the market is not as strong as price is advertising. But it is opening at a high. Right? Now, if another thing to follow is if the market opens with a gap, the market closes the gap, or it keeps trading and then closes as soon as the market closes the gap. If that's the case, I start to monitor. I start to see the opposite side of the range. Things change when markets closes the gap. The market closed the gap on Friday here. Very mechanical selling. And I expect some selling too today. The traders are now used to sell the rallies. You may see some selling here. Now the bigger picture, there's change in the monthly. The opposite side of the range has been reached. Market is being bought from the 100. And look at this, man. This is incredible what's happening in the oil markets. Look at gold here. You can put a trend line on this. Very mechanical selling on gold. All of this selling here. Now we may have a sharp short covering rally here. Sharp long liquidation here. Some kind of range maybe in crude oil. I'm not saying that's going to happen, right? But the conditions are there. But the most important thing, these bonds, what's happening with the bond market here is getting so close to these historical lows. And this can actually, this is the opposite of what the market is doing now. The market we see right now in the overnight as 5 a.m. We have overnight inventory that is long, but the bond market is saying, when you see the bond market, you cannot about say, wait a minute, right? Wait a minute. Look at this. Look at what happened in the overnight. The bond market closes the 10 years. Did this close the gap? Let me check. High 150, low. No, it didn't. No, it did. It did close it, but this is very questionable here. The thought it did not. Dollar has closed the gap and gold open with a range. Inside range. Okay, be careful. I'll keep an eye on the bond market here. This seems like it's going to be a very interesting day. There is currently a counteraction in progress to the overnight long inventory here. If the market, we still have like more than 20 minutes to go. If the market opens down here in this area, now that will be a negative sign for the market, because all of these spike, that will be the market opening inside the spike. I'm not saying the market is going to break following that, right? But the sign, the first thing is the negativity that action paints. We can have a rally here. The thing to monitor would be the market can take this high out, and following that upside continuation will close the distribution. How this happens is the thing, right? Does the market has conviction to it? Many things to monitor here. Opening in here is market opening inside previous day range. Opening inside previous day range, advertised chop. The closer to the center, the higher the also we're going to have a rotational day. And sometimes we have to take quick decisions. We have to be fast in our decision process, but most often than not, we just need to take our time to watch and observe the market. Something from Jim is, and you develop this thing with time, right? Most of the time in trading is spent observing or watching a location for a trade, if the market is in or out balance, what the tempo, what the conviction of the market is, what the pace of the market, the direction, and the most important thing is of all, developing value. All right. I think that's it for today. I'm going to keep doing my homework. I wish you guys a good trading day. Stay safe. Good luck. See you on Twitter. Bye-bye.